Hello students, welcome to the video. In today's video, we'll be discussing a practical problem from the subject Financial Marketing Markets and Services, which is for BBA third sem. This question might be asked as a case study for 15 marks or for 10 marks depending on your question paper's pattern. So let us start with the question. It is a lengthy problem. I hope you should have patience to listen to it and to understand it clearly. Let us start by reading the question. Sushma Software Limited is interested in purchasing an asset costing rupees 10 lakh. It has two options: to borrow the amount at 20% per annum repayable in 5 equal installments, or to take the asset on lease for a period of 5 years. The rent at the end of the each year is 2 lakh 40. The company is in tax bracket of 50% and follows a depreciation on diminishing balance method at 20%. The asset fetches a salvage value of 3,60,000 at the end of 5 years. You are requested to advise company on lease or buying the asset. There are two notes for this as hints they have given it. The present value of rupee 1 at 10% discount. Now why this has become 10% is because the interest is 20% and the tax on it applies as 50%. If you apply 50% on this 20% interest rate, it will come back to 10%. Then for the first year the value is 0.909, for the second year 0.826, third year 0.751, fourth year 0.683, fifth year 0.621. This value is got from a table, or it can also be calculated with the help of the formula 1 divided by 1 plus r raised to n. Then the second note what they have given is the present value of annuity at 10%. At 20%. This 20% is copied from this interest. It is 2.9906, and again if you apply 50% tax on this 20%, it will come down to 10%. For 10% it is 3.791. Let us start with the solution without wasting much time. The first step is calculation of loan installment, and the formula is amount of loan into PV factor of annuity. These two values are given in the questions. The value of the amount of loan is here at the start, 10 lakh, and the annuity factor what they have given is 2.9906. It's in the adjustment here. If you multiply these two values, you will get the loan installment as rupees 3,34,381. Okay, so the next point is we have to prepare the table. The table has year 1, 2, 3, 4, 5, 6 columns. The first column is year 1, 2, 3, 4, 5. We take 5 years because the installment is 5, or the period of the loan is 5 years. So we take 5 years. Then the next column is the next column is loan at the beginning. The loan at the beginning for the first year it will be 10 lakh, and this loan installment what I got here is 3,34,381. This will be same for all the years, and this is got from this working note. The working note is here, 3,34,381. You please write it down in all the years randomly. Then the next column is interest payment at 20%. This is got by multiplying the second column, that is this 10 lakh into 20%, you get 2 lakh. For this 1 lakh 73 123, 8 lakh 65,000 comma, this is comma, okay, 8 lakh 65 691 into 20%, you will get this. Similarly, all these values are got by multiplying the second column with 20%. Now, why 20%? In the question you can scroll back and see the interest rate is 20%. Then the principal amount, the next column, the fifth column. The fifth column is, you can understand this by when you subtract the third column, that is this loan installment column and the interest column, the fourth column. So I'll be writing here third column minus fourth column. So if you minus these two columns, you will get the answer. Then the last column, that is the sixth column. The sixth column is, you should take the first column, sorry, the second column. This will be the first column, this will be the second, this will be the third, this will be the fourth. Okay, now it's clear. You should take the second column and you should subtract it with the fifth column. So I'll be writing here second column minus fifth column. So if you do this, you will get the last column. So the last column automatically will be coming as 0, or it will be a negative number. So you can just make it as nil. So the point here is at the end of the fifth year, your loan will be reduced to 0. So that is the point here. Then let us continue with the next step, that is calculation of loan repayment. I hope the first step is clear. In the second step, if you can see it clearly, then there are 1, 2, 3, 4, 5, 6, 7, 8 columns in it. The first column is year column. The first column is year column. Again, it is a copy paste column from the question. 1, 2, 3, 4, 5. Okay. So in the second column is also the copy paste of the first table, loan installment. In the first table, you can see it, as you can see it, the loan installment table is here. You take all these values, and you put it down here. So this table is coming here. The third column will be the second column. Then tax on interest. In the previous table, you'll be seeing the interest column. So this column from 2 lakh to 55,728, you should put 50% for all these values. You will get this, because there is a tax in this problem which has been 50%. So this is to be applied here. Then tax saving on depreciation. So this column is bit important and it has one more calculation. So to understand this column, you should see the next table. The depreciation is calculated like this, and to be kept in mind, the depreciation method what they are using here is reducing balance method. For the year 1, the cost of the asset is 10 lakh. For that they have given 20% depreciation. So for 10 lakh into 20% depreciation, the value will be coming as 2 lakh. The value will be coming as 2 lakh. So this is the depreciation what is charged. So on this depreciation, we should put 50% tax. So then you will get 1 lakh as the answer. So this is the answer, 1 lakh, what you will see in this column, 1 lakh. So for the next year, the original value of the asset is 10 lakh from the previous year minus 2 lakh depreciation from here. When you subtract 10 lakh minus 2 lakh, you will get 8 lakh. Upon this 8 lakh, you should put 20% depreciation. Then you will get the value as 1 lakh 60, and on this 1 lakh 60, you should put 50% depreciation. Then you will get the depreciation value as 80,000. That is what you will see in this table, 80,000. Then for the third year, the value of the asset at the for calculation of depreciation becomes this 8 lakh. This 8 lakh comes here. This 8 lakh comes here. Then in this you should subtract the previous year's depreciation here. Then the answer will be 6 lakh 40. On this 6 lakh 40, you should apply 20% depreciation. Okay, students, this is how the depreciation is calculated for the third year. Then for the fourth year, again we should take this value 6 lakh 40 minus the previous year's depreciation, that is this 1 lakh 20. Then you will get the answer as 5 lakh 12. On this you should calculate 20% depreciation, that will come around 1 lakh 2,400, and on that you should again calculate 50%, that comes as 5 lakh 51,200, and that is written here. So this is how you should calculate the depreciation column. Then the next column is easy, it is simple. This is total savings. In this total savings, let me give the column numbers, it will be easy to understand. So this will be the first column, this will be the second, this will be the third column, this will be the fourth column. Total savings is nothing but third column plus fourth column. Third column plus fourth column, it will give you the fifth column, as this is the savings. As you can see here, 1 lakh plus 1 lakh becomes 2 lakh, 86,562 plus 80,000 becomes 1 lakh 66,562, and so on. Then net cash flow. Net cash flow is also easy to understand. You should take the second column and you should subtract it with fifth column. For example, I'll be showing it. Uh, Second column, the first value is 3,34,381 minus 2 lakh will give you 1,34,381, and hence you can continue the table. Then the next column is PV factor. This PV factor is got from the question. As you can see here, these values are straight away copied down to this table. Okay, so those values will come here. Then so we will name this as the seventh column. Then the last column, that is PV after cash flows, is sixth column into the seventh column. That will be the eighth column. So this into this gives you the eighth column. That is 1,34,381 into 0.909 will give you 1,22,152, and so on. At the end of this column, you should add this, and this will be the answer for your this table. So this will be the answer. The total is 7,34,362. And once you get this step, you should come down to the next step, calculation of borrowing cost. The answer what you have got here, 7,34,362, should be taken here as net cash outflow after tax. Then here we should take the salvage value, and the salvage value is got for the fifth year. So this salvage value 3,60,000 is from the question. If you see the question, I'll scroll it down. So here is the salvage value 3,60,000, and you should multiply, as it is for the fifth year, you should multiply with this fifth year's PV value 0.621. So that is what is done here. The salvage value 3,60,000 into 0.621. The answer is 2,23,560. Once you subtract these two numbers, then you will get to the final answer of the borrowing. So if you opt for the borrowing method, then the cost what he has to pay is 5,10,802. So this, all these steps are only concerned with borrowing. Now the next step is with the leasing option, calculation of present values of cash flow after tax under leasing option. This is quite simple. Year 1 to 5, you should take here directly 1 to 5th year. The lease rent what he has paid is 2,40,000. This is got from the question again. Let me scroll down and show it to you. The lease rent is 2,40,000. Here it is. Okay, so that should be taken in the second column. Then the third column is tax savings on lease rent. As the tax saving is 50%, let me mention it here. It is given in the question. You can have it, you can look at it later. When you apply 50% on this 2,40,000, you will get 1,20,000 as the answer. Then the next step is cash flow after tax. So this is nothing but the second column minus third column. Let me make a note of it. Second column minus third column will give you the fourth column. Okay, then PV annuity at 10%. So this is given in the adjustment 3.791. You can see it here, 3.791. That is to be taken from the question. Then you should multiply these two columns here. That is the fourth column and the fifth column. This is the fifth column. Let me make a note. So the last column is fourth column into fifth column. Sorry, fifth column. You will have PV cash flows. Then the answer what you'll be getting here is 4,54,920. So this is the cost what he will incur if he opts for a leasing option. Then the conclusion at last. Cash flow under borrowing option is 5,10,802. That is from here. Then the cash flow under leasing option is 4,54,920. That is from here. Out of these two, whichever is less will be opted. So the lesser amount here is under leasing, that is 4,54,920. Therefore the cost under leasing is less compared to the borrowing cost, hence leasing is recommended. So this is how you should be solving the case study. If you find any doubts in this, or if you need any further clarifications, please you can comment down below, and keep watching the videos for more solutions. Thank you.